behind it, and that is because Accenture, after its earnings, cut its fiscal year 2024 growth guidance. And Reema will tell us the 5 reasons why this is happening.
Well, first let's start with what is this guidance cut, right, by Accenture. So the first point is that they've lowered their full year revenue forecast. Earlier, they were guiding for a 2 to 5% revenue growth. Now they're guiding for a 1 to 3% growth. The cut in their organic guidance is a lot more, it appears to be a lot worse. Earlier, it was 0 to 3%. Now they're talking about the possibility of negative organic growth, and even the margin guidance has been trimmed. So that's point number 1. These are the numbers for Accenture's, the new forecast. 2, why did they cut the guidance? What changed in the last 3 months? It appears that discretionary projects, particularly in the smaller size projects, discretionary spending, particularly in the smaller size projects, have come under further pressure. That's what's changed. So the company does say in their conference call that the long-term, larger, transformational kind of projects are intact. But the companies are funding it by, cutting back on spending in the smaller project. Now, the third question is, how does this impact the Indian IT, companies here? Why is it that we're seeing such a big loss? Now, the expectation was that FY24 was a very, very weak year for the IT companies, right? That in FY25, things will rebound. Now, that is being questioned. Now, if you look at the consensus expectation, a couple of months back, everyone was talking about a double-digit kind of revenue growth for the IT companies, 10%, maybe 11%, but close to a double-digit, near double-digit. Now, Accenture is saying that their outsourcing business, which is again directly competing with the TCSs and Infosys of the world, will be growing in mid-single digits. So, is there a risk that the revenue forecast for the Indian IT companies for FY25 gets cut back? That's the big risk. Now, what are brokerages saying now? CLSA says that IT remains in an earnings down cycle. It's not reflected in the valuations. Morgan Stanley also says that consensus revenue forecasts for FY25 are at risk, and the pace of recovery, which is assumed over the coming quarters, could be slower than expected. But here I'd just like to add one caveat, is that Accenture's numbers are August ending, right? So their guidance only takes into account, from an Indian IT perspective, from April to August, Great. Right? So if your forecasts were assuming that in the second half of the year, FY25, things were going to rebound, it's not getting captured in the Accenture's numbers. So that's an important point. Now, how have the Indian IT stocks performed? Well, today, of course, you're seeing a big cut. But, going into this event also, I think the street has been a bit nervous about the numbers. So, month to date, the Nifty IT index is down 7.5%, while the Nifty has been on the flatter side, with names like Infy, HCL Tech nearly down double digit. And just a quick word on generative AI, since that's the buzz, you are seeing a big pickup in generative AI bookings. On a quarter-on-quarter basis for Accenture, it's up 33%. But I think now, the street is going to price in a very cautious guidance from IT numbers in come April when Infy and HCL Tech. So I think some of that optimism is now going to fade away, and going into the numbers, you will see that cautiousness.
We'll know all of that in 2 weeks from now, and the nervousness is showing on the numbers, right? The Nifty IT index has turned negative for the year now, courtesy the fall that we've seen this month. And speaking of IT,